One.
There are bad days to report earnings, and there are really bad days to report earnings. Yesterday was a really bad day. You know how analysts jump on the bandwagon, rah rah bull, race price targets? Well, they're jumping off the bandwagon now and they're scrambling to get over each other. So we got a lot to talk about. A zillion earnings reports. Marc Chaikin joining us at 8:15. We'll get his perspective on the markets. It's Thursday and it's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
All right, folks, let's get the show on the road. Down 13 and a quarter handles, 45.24, trying to get back over yesterday's low. The buck continues to move higher. Not good for stocks. Up almost 8 cents at 102.46. Another leg down in the bond market, down over a point at 121 at 6:30 seconds. Crude can't hold up under the selling pressure of everything, down 7 cents at 79.42. Gold, that is down 4.90 at 19.70.10. Silver futures, they're going the same way. They're down 25.7 cents at 23.61. And Bitcoin, boy, Bitcoin's getting boring. Down $35 at 29,245. Let's poke the bear. Dennis Dick here. Bring him on. And Dennis, just sentiment, sentiment has shifted. Was
At
it
least
shifting
temporarily.
last Thursday? Right?
Mhm,
With that
mhm.
decline, or was like the Fitch downgrade? Was that just the catch me out?
Well, actually, both. So interesting. We talked about on Thursday. Was it Thursday the move? We talked about
It
Friday.
was Thursday. I know
Thursday
for
was
sure.
the key reversal day, and we talked about so many key reversals in the market, and that's what got us concerned. That's where I sold 5 stocks out of my long-term portfolio. Was back on Thursday because I was concerned that it could turn into something bigger. Then we had the relief pop on Friday, call it the suckers rally, and that's what it was. It was a suckers rally. Even Monday, holding into Monday. But the Fitch was definitely the catalyst. That was what kickstarted it. But the sentiment had already started to turn. You started to see, not a good response. We talked about this, last week. The response to earnings haven't been great, even though the earnings were beating and 73% of companies had come out, they weren't holding gains. People were in profit-taking mode. You could see that. So for 4 or 5 days, the market just kind of sits there, and you could feel that this market is different right now because people are taking profits. And what we see here today, even from the analysts, is the same exact thing. The analysts are all taking profits. I've got almost 30 downgrades in my Benzinga Pro here, almost all to neutral, where people had buy ratings on stocks, and the analysts are taking profits there too. So it's profit taking mode here. It's not, like this, like, oh my gosh, the end of the world is coming here. It's that we've been on a ridiculously overdone run, and we need a cooling period. And that's what we're getting here now. Is it more than that? Well, that's always to be determined. But I think it's more than just, the 60-point sell-off that we had yesterday. So I do think you have now some nervous Nellies here on strength. You're probably going to see sellers. We saw it again last night on multiple earnings reports, which we'll get to in a second. But the theme remains the same. The theme right now is profit taking.
All right, let's bring in Money Mitch here. I tried to convert you guys over a couple days ago with the 4,600 level. We were teetering.
Mhm.
We posted actually a new closing high for the move on Monday too. Not a new high, but a new closing high. So a lot to discuss here. Mitch, we got a lot of earnings. We got Marc Chaikin coming in at 8:15 here. So should we get going on some of these earnings reports? Just real. Oh, the other thing I wanted to add: can Apple and Amazon save us? I mean, don't
It's
you feel like
possible.
even if they have good reports that people are going to sell into it? I mean, that's been the mantra.
That it's possible. I think on any relief rally that we get on Apple and Amazon, I'm at 55% cash in my long-term portfolio. I may actually raise that higher if we get a relief pop on Apple and Amazon. I own Amazon in my wife's long-term portfolio, so it's the one that I obviously have bought recently. 3 months ago, there it's up like 25% from where she bought it, or 20% from where she bought it. So I'm long that one. But you can't sell everything, right? So I do think if we get a relief pop, I do think it gets met with more sellers here, Joel. I think there's people nervous now.
I think that one thing to remember, of course, is Apple's expected to come in on declining revenues, right? And I think that's one thing that a lot of people aren't even considering, right? Apple's expected to decline in revenues here, so I think that we should probably see Apple get a little bit of a tougher environment here on their earnings report than I say Amazon's. I think Amazon still has the ability to come in here, mention multiple things of AI, maybe get their stock going. If I had to pick one of the two, I'm going with Amazon also.
I just think Apple too, and we can do a quick preview if you want, then we'll get into some of these other earnings reports here, but it's priced for absolute perfection here. They cannot say anything about gradual growth. They've got to say robust. They've got to say stuff because this is trading 30 times earnings here now. It's as rich of a multiple as Apple has been in 15 years, or maybe even longer. This might be, I don't know, I don't have the history of PEs, I don't track that, but I'm probably saying, because when we go back to the tech bubble, Apple was just not even, in the cards because it wasn't really there. So like, I mean, it was there, but it was like smaller company then. So I do think that we're at this point here now where Apple is priced for perfection, and it's going to have to be an amazing quarter for it to go higher. It might deliver. It may deliver, but I'm skeptical that it can deliver the bar that investors are looking for.
I'm just going to throw out one number here, and for Apple, looking at this upper right chart, big run consolidation with what the market's been doing, but 192. I mean, it looks like if you're you're 190, 171, it just looks like you're hanging there on a cliff here. Several days,
Look
it
at
just
that
really
run.
isn't buckled. Now,
Joel,
192 is what I like.
Take your Jeff Mackey purple crayon. Hi, Jeff. Take your Jeff Mackey purple crayon and draw. How steep is that?
Oh, I wish
mean,
I
we are
could.
up. That is like
I
a
should be able
crazy.
to.
That's been the craziest bull market for Apple we have seen in a long time. It took its market cap from basically 2 trillion to 3 trillion right there in the last 4 months. They are priced for absolute perfection here. It better not disappoint.
Let's get into some of these earnings reports before we get Marc Chaikin on in just a little bit here, guys. Let's go to Qualcomm. Q3 EPS coming in at $1.87, beats the $1.81 estimate. Sales of $8.44 billion, missed the $8.51 billion estimate. They do see Q4 adjusted EPS to $1.80 and $2 versus a $1.91 estimate. Revenue outlooks at 8.1 to 8.9 versus an 8.7 billion outlook. Qualcomm did say that Snapdragon will power Samsung's new flagship Galaxy phones, and also said that 2023 headset units would be down at least a high single-digit percentage due to weak macro and slowing China recovery.
I'm long Qualcomm in the long-term portfolio. We know I talked about this one last week. I had sold half when the stock doubled, bought it from 60 off of good Sean Udall there, and I sold half around 120 when it doubled. So I'm forever playing with the house's money on this thing. It's kind of still where I had sold half of it. I know it had the ridiculous run up to 180, and I was half in on all that. So it sucks that it's back down here at 120. I think if you got this thing, and again, I'm not buying the initial dips here because I just feel like we're not in the buy the dip market right now. I feel like we're more in the sell the rip market. So that's the consideration. But I do think, like with Qualcomm here, I think there is value. I think there will eventually be some dip buying, but if it happens on day one, it bounces a bit. I think it just gets met with more sellers. I think if you got to that 105 area, I'm not saying it's getting there today, but if you ever get there in the next couple months, if we have a serious correction, I think that's an area where I might consider rebuying some stock. 105, 100, somewhere in there.
Step down seller as we speak right now. They got their foot on the throttle here, down at 117.33. I really can't give you any like reliable, or what's reliable support in this market. Parallels in the lower 112 handle. Let's call it 112.40. That's another $5 away. That'd be down $17. That would be a lot, but that's what I'd be looking for in the short term in the lower 112 handle. And if you're going to be waiting on a gap fill in this one, 128.33 is a ways away. $10. You're going to need a big relief rally to get it back up to that level.
Did Qualcomm just give us a little insight on potentially what could come on Apple's report today? It's mentioning slower China recovery is something that I would be thinking about going into Apple's report tonight.
Apple is again, we're just going to say the bar is very high. It's trading as rich of a multiple as it has in years. They better not disappoint.
All right, let's keep going. Let's go to Oxy. You still got some Oxy, Dennis?
I do. I thought about
right.
selling it. Obviously, hindsight capital is really 2020 here because I should have sold everything 3 days ago when I started getting bearish. But your razor up to 55. Like, how bearish do you want to get? You don't want it to like be wrong, and then you start missing the boat here again. But I guess you should have just sold everything. I'm still in Oxy. And again, I sold half of it. So I'm sitting here with half of it and looking. And I was like, Warren's in. I'm in. You got to own something.
Adjusted EPS misses here on the estimate by about 4 cents on the estimate. Sales of 6.73 beat the 6.69 billion estimate. They did raise full year production outlook, but of course trading lower after missing that EPS estimate here. Just to give insight there, I did get out of PXD, so got out of that one. I still have a little piece of
Did you take it through earnings?
PXD, yeah, I did.
Oh, you did. That was gutsy.
Yeah,
I'm still in my PXD.
I mean,
as well.
It was going straight up. So
yeah, I'm still in my PXD too. Those are the only 2 oil stocks I own. I mean, they print money, these things. I was looking at my portfolio and I was like, I'm in a lot of printing presses there. I'm in a lot of things that make a lot of money, which isn't a bad place to be. But again, if we're going to a bear market, they hit everything anyway. So it probably
I was seeing
was a
yesterday like
pop.
a little bit of upside capitulation on that PXD.
I think so.
And then so I was like, you know what? I'm going to take these gains off, especially as I'm starting to see solar get whacked. I was expecting to see solar go up with energy continuing to rise. But now I'm also seeing 82 be a hard resistance for crude overall. And so I'm looking to see if we can get crude also over 82. Because if not, these oil stocks are going to run into a wall.
No balance to be found.
Yeah,
in
PXD also, some people were buying it predicated on ExxonMobil coming to the table, right? Yep. Was that the Pioneer Resources? So a lot of people got their money back. Dennis, is that going to be a new chapter in the book during a bear market? You have to own something. Is that what a new
and again, I think, and Mark's excited to get on here because I think Mark's going to come on bullish. We're not saying bear market here. I don't think I said bear market. I'm not saying bear market. I'm saying profit taking and correction. So we are 100%. Definitely not.
Yeah, we were talking about that yesterday.
In a bear market here yet. Bear market is 20% off the highs. We're 1% off the highs, guys. 2% off the highs. Yep. So we are not talking bear market whatsoever. We're talking correction. We're talking just some relief from the relentless buying. That's what we're talking. I want to be very, very clear here because people will say, and put words in your mouth, and I'm not saying bear market. I believe I've not said bear market once on this show. And multiple people saying, why do you think this is a bear market? Because I said stocks are correcting. Doesn't mean I think that we're going 20% down from here. I think we need a healthy correction. Let's bring on Marc, see what he says, because I think he's going to come on bullish.
All right, let's do it, guys. You guys smash the like. Let's get it going. Marc, what's going on? How we doing? It's good to have you back, of course. Marc Chaikin, founder of Chaikin Analytics. How we looking, Marc?
We're looking good. A little touchy there, Dennis. You did say if we're going into a bear market, you got to own something. So it's a question of where you put the emphasis.
Okay, if we're going into a bear market.
Yeah. Okay.
Marc, coming to my defense for
if I thought, let's just say this, Marc. If I thought we were going into a rip roaring, I wouldn't own 45% stocks right now.
You wouldn't own anything. Except a couple of puts. I get it.
So I just think we've been so hot. This market has just been rip roaring. And when I start seeing, I talked about this last week, when you start seeing bankrupt companies like YELL, rip roaring higher up 300%, and you start seeing Tupperware go. It's like they're just buying everything
Nicola!
relentlessly here right now, and
I
I feel
hear.
like we're going to have a cool off period. So
Well,
I think we need a cool off period, but I want to get your thoughts.
I do too. And I don't think it would have happened just because we were overbought or because sentiment started to get a little overheated. I think it required an exogenous event, totally unexpected that Fitch did this. But the irony is Standard & Poor's did this, as you probably talked about, in 2011. And people say, well, the market held together. It didn't. It was down 9% from the May peak to the October low. So never underestimate the power of rising interest rates, especially in this environment where they're clearly affecting the PE ratios of tech stocks. So for me, the only quibble I'll make is I think we're having a pullback, not a correction. I define a pullback of 5 to 10%.
Okay.
And so, I think I would keep my hands in my pockets for another few days, maybe a week, and see if interest rates really pop above 425 on the 10-year. But I'm still looking at tech stocks, which are going to get a lot cheaper here. And I mean, on a relative basis, I don't think they're going to collapse. But I'm looking at my favorites like Adobe and Fortinet, but I'm not buying them right here. I want to buy them. So the difference is, and the S&P, the 21-day average has held for, I think, 3 months, and we closed right on it. And for most stocks that were in an uptrend, the 21-day average was your sort of trailing support. I think if we are truly in a pullback phase of 5 to 10% in the market, I think 5 to 7% is more likely, then these stocks will go to their lower volatility bands. I use the Keltners, most people use Bollinger's. So that's the difference between a pullback and a clear-cut uptrend. You don't buy at the 21-day average in a pullback, you wait for the lower band tag. And that's a difference in tech stocks of maybe 4 or 5%. In the market, it's 2 or 3%. So that's where I am, basically. I'll give you some levels because I know Joel likes levels. So we'll
Mark, I just want to add to this point. You know why I think we're not going to bear market and why we're not going down 20% is the Fed has so many bullets in the chamber here now. I mean, if we started getting ugly, they've raised interest rates so much, they could just pivot and the market would just rip off that. They could just suddenly pivot. So if the market really started to get ugly, they could say, look, we see this and we're done here now. So it's a different animal here now. Like they have so much power to just start lowering rates to protect the market if they want to. So it's hard to get on the full bear train that we're going to revisit October lows, or this was just a bear market rally in the overall, bull market rally in the overall bear market we've been experiencing for the 3 years. I think it's different. So I'm still in the bull camp overall, but I think like it's prudent to just take some profits and maybe we re-enter when we get that 5 to 10% correction that you're talking about.
I agree. Over the last week and a half since we talked last, we got out of our options trades in Generac and Microchip.
And good selling Generac.
Also, at some point that's going to be a buy because that was all supply chain issues. They reported a good quarter, and people are still buying those generators, especially in the hot states like Texas and Arizona. But and we took our Allegro Micro off the table at a really nice price. But I'm still staying, in very long-term portfolios with Adobe, with Fortinet, with Palo Alto Networks. I think you don't want to give these stocks up. This is sort of, I think, a Jesse Livermore market. Mr. Turkey said, if I sell, I'll be losing my position. So I think
I remember that quote. That's a good quote.
It's a great quote. So levels for you, Joel. Someone this morning, very smart guy who said, I think the 50-day average will not hold. And I agree that 43.95. So that takes you down to 40.
Did I say that? I don't know. Did I say that? Or did someone else say that? You said a very smart guy said.
No, it was actually Ed Yardeni. That's okay.
I like Ed.
Who's been very bullish, by the way. And he's now on a pause. But I think 43.20 to 43.50 is probably where they should go, and that would be, in the 5 to 6% range, maybe 4,300. And it will affect small caps and mega tech because it's all about rising rates here. Don't complicate it. This is just about the bond market's reaction to the Fitch downgrade, which should not have been it was a surprise, but it's meaningless because Standard & Poor's has been there since 2011 to AA+.
We're on the line with Marc Chaikin of Chaikin Analytics. Joins our show every 2 weeks on Thursday at 8:15 to give his fundamental and technical views on the markets. Marc, I got to ask you here, where are you at in the Bill Ackman, Warren Buffett battle here? Ackman just says he's just short a pile of bonds here. I don't know if he just did it now. If he's doing it now, well, man, he doesn't mind selling in the hole. And Warren says, no worry. I'm buying treasuries here. You're looking at the 30-year bond. You're looking at the TLT. And what's that trying to tell you? So whose side of the argument are you on there? Ackman or Buffett?
I guess it depends whether you're short-term, intermediate, or long-term. On a short-term basis, I'm with Ackman because you've got all this supply coming in. The Fed's doing their refinancings, and short-term rates are on a little bit of a run here. But intermediate to long-term, I agree with Dennis. The Fed's pretty much done. I thought they were done before the announcement of the downgrade of the credit for the U.S., but I don't want to be in bonds. I think cash is great. Look what you're getting in money market funds and 5%. I don't have to make a bet on long-term bonds here. I can park my money in short-term funds and get 5%, 4 to 5%. That's where I want to be with excess cash. But I think we're in an extended bull market. I think we hit my summer target, Joel, which was 4,600, and looking for 5,000 to 5,400 by sometime next year, election year.
What do you think about that Fitch report? It kind of is like all these things that people have been saying, and the market's rallied 15, 20%.
It's gratuitous.
What do you think about that?
It was unnecessary, gratuitous. It basically told us what we already know, that there's too much debt out there. And, the stop clock guys have been talking about that for, I guess, for 8 years, before before COVID and before all the QE stuff. So I think it was gratuitous, meaning what's the point? All it did was, wave a red flag in front of a bull, basically, and tell everybody what they already knew. We have too much debt in this country. But, whether there's the resolve to do anything about it is really questionable. I just don't think it's going to happen.
And they had to do it between 5 and 6 when the S&Ps were closed, so Dennis could get a leg up on me because we're in our SPY futures battle. But
by the way, I don't think this is 2011, meaning that in 2011 you had a huge bull run from the March 2009 lows. We're barely into the bull market, up only, I think, 25% at the high. And I don't think this is meaningful. I think you wait for the bond rally to peter out. And again, look to buy quality stocks, cash, not cash burners, but cash earners at their lower volatility bands. I could give you an idea of where they are in some of my favorite stocks, just to give you an idea of what the downside might be. So Fortinet just broke the 21-day average yesterday. Lower band is around 70, trading at 74.32, which would give you about a 14% drop from the previous peak of 2 weeks ago. Adobe, which I love because it's both legacy earnings plus AI. Adobe, it's a long way down.
Mark.
Pardon?
You and me both. We love I love some Adobe.
Now, Adobe, the lower band is down around a level that I don't think we're going to see, which is maybe 480. I don't think we're going to see 480. That would be another 10% down. Here, the 500 to 510 level may hold. And so, that gives you an idea of what's possible. Palo Alto Networks, which we just recommended a week ago, that has a double top. So that has more risk down to maybe 220 from 236 here. But that's an idea of what's likely to play out. In terms of Apple, let's just give you Apple. By the way, Google is my absolute favorite mega cap stock, bar none.
You think Apple gets hit hard tonight on earnings, Mark?
That I don't know. As someone said, I'm a quant, not a
hey, that's
not a fortune
good call
teller.
there, Mark.
It
it's
closed
going to be
right
a hard
on
one, that's for sure.
It closed right on its 21-day average. So, and there the lower Keltner channel, which is what I use, is at 185.
Love it. Love the Keltner channels. I've been definitely focusing on the trend. And now that we're starting to see the trend break here and a little bit of change also from the reports, right? We've recently started to get reports where we're actually seeing stocks get hit, even if they're beating, right? And one thing that I'm noticing is future earnings still not looking that great. And I tried to study a little bit of the .com era to try to relate it to this era. And one of the things that I could see in the .com era was earnings started to come down, and that's when that bubble started to kind of break. Is this what we're seeing here, Mark, or is this more along just a healthy correction?
It's a healthy correction. This is not at all related to 2000 in my view. We saw that in February of 2021. That was the equivalent in tech of 2000. These stocks dropped 75 and 80%. Peloton and even the tech stocks. What my favorite name in mega is Alphabet. And it's not for the obvious reason. It's not all AI, it's quantum computing. And quantum computing is going to become a big theme over the next 3 years. You combine quantum computing, and there you're talking about Alphabet, IBM, a couple of smaller players. That's where the big bull market's going to happen, because medical advances, when you combine quantum and AI, are just going to go off the charts, and all sorts of other applications. So Alphabet, with that nice ad and search revenue and quantum and AI, they haven't even released their AI product. That's the stock I want to buy on a dip. If you get the gap fill, you may want to put that up. The gap fill would be, I'd be early if we get the gap fill, happily.
Mark, I wanted to ask you, what was the trigger on the Generac exit? I mean, you said you had some options. Did the Chaikin Power Gauge change, or do you still have the stock? Because that was a pretty good timing on that one.
No, it was, the options were long-term options. It was just a feeling that the stock had a run and was not positioned. It was a way to raise cash, basically, in our options accounts. We have an options newsletter called Chaikin Power Trades, and it was just a time to take profits. It wasn't spiking up like the rest of the world. I would look to get back into it here, as long as it holds 115, 120. It closed at 115. I think that's an overreaction. It was mostly supply chain issues, but it was just a field, Joel, because we had some nice profits. We also took them on microchip, which wasn't as dramatic a move. It was just a way to manage the portfolio and not stay 100% long.
Last question, Mark, real quick. What did you think about Unity's earnings? It came in still missing pretty big. I don't understand why they missed by 51 cents. There had to have been something underneath there. What do you see in Unity?
I see a potential oversold buy signal coming up. Unity is all about the future. It's not about now. And it had been acting very well. Not quite as well as you would have hoped, given all the excitement about AI. But I think long-term Unity is a great hold. It's just a question of buying it right.
All right. Well, thank you.
I would give the overreaction a couple of days. In this market, 2-3 days before the sellers are really out of it.
All right, we'll see what happens if we do get that market correction. Thank you for bringing us multiple outlooks for that. And like always, we'll definitely stay up with everything Marc Chaikin does. You guys can check out his Twitter right there in the description below, and check out Chaikin Analytics. Check out the Power Gauge if you haven't checked it out before. That's Marc's. That's your baby, right? I mean, you put so much time, so many multiple indicators that got you to the Power Gauge. If you guys haven't checked it out, definitely check out the Power Gauge.
And by the way, the Power Gauge is still bearish on Oxy.
Okay. Thank you for a little added bonus. It's always good to have you, Marc.
Are we part of the Power Gauge? Are we
we bullish, baby?
Prep should be an input. I think it is.
Are we a contrarian indicator, Marc?
No, I think you're a coincident indicator.
Oh, we want to be the main indicator.
I've been
we're
called
the
a lot
contrarian
worse
indicator.
than
He doesn't want to tell us. But we're really the contrarian indicator in there. We're the Jim Cramer.
Oh, no, the Jim Cramer's the weather vane. You don't want to be Jim Cramer.
We love you, Marc. Thanks for coming on.
Yeah, great show, guys. Thank you. Enjoyed it.
All right, jobless claims coming in there. Yes, 227,000 versus 227,000 estimates. So don't worry, guys. I didn't want to jump in there. I don't think that's going to make too much of an effect.
Jobs number tomorrow, though. Jobs number.
I mean, let's just be honest. Have these jobs numbers done anything for the market in the last 3 months? Nothing.
They're not interested in it.
They're not interested in that. I think we finally started getting away from all this economic data focus. We just want to hear about earnings. We want to hear about AI. We want to hear about revenues. And if anything, forward-looking stories, not necessarily about jobless claims. I mean, I don't even think anybody trusts these reports anymore. That's the truth. But hey.
All right, we got Blue coming on tomorrow. Ahead of the jobs number at 8:15. So he'll be on and guide us through the jobs number. I mean, you could look at it. Oh, weak jobs number. Oh, the Fed is done. Lower rates are here. If it's a strong number, it'd be like, man, you just can't break this economy. You just can't break it, no matter what you do. We just have such a strong economy. So that's a very positive outlook on the jobs tomorrow. Mitch, let's pick it up on the earnings parade and maybe get back to some downgrades.
All right. So remember how Dennis, tried to put us on fast forward yesterday? Well, we're actually going to go on fast forward this time. Let's see how quickly we can get through some of these earnings reports, because there's a lot to go through. I'm going to read the numbers, try my best not to give an outlook. I'll let Dennis and Joel take care of it. If you guys want to hear anything from me, like always, chat, you guys can mention in the chat, and I'll take a look.
Oh, yeah. We want Money Mitch comments here, too, but we're going to fast forward.
If there's
I think we just go like you go, I go, you go,
like
we
always.
go.
Let's get it. Let's get it, guys. PayPal coming up first.
Let's go.
PayPal Holdings Q2 EPS $1.16 beats the $5 estimate. Sales of 6.81 beat the 6.59 billion estimate. The stock slides after inline Q2 earnings and active account numbers slip.
Yeah, they don't like that. They're not seeing, jump 7% revenue. So it was a okay quarter. It wasn't great. The stock has run up into it. But man, you're reporting on the wrong bloody day. Anything that reported last night, reporting on the wrong day, because we had our worst sell-off in a long time, and the bears were just running with everything. Even the stocks that beat were getting hit. So here you are, PayPal down $6. Good support down here at 65 to 66. It's trying to bounce where you think it would bounce. But with that being said, I'm just not in the buy the dip camp right now. I tweeted that yesterday. I'm more sell the rip camp than buy the dip camp. So I think you want to let the dust settle here, but I think you put it on your shopping list. There is some support down here. I just don't think you want to be too early.
Two areas of support. Dennis identified the first one. Multiple lows at the 65.5 area. Take an eye on that. And then another string of lows here at the 62.5 area. But right now, let's focus on, you got 5, 6, 7, 8 lows right around the 65.25, 65.5 area. That'd be a target for me on the downside.
Let's go to the next one here. Shopify. Let's go to Q2 EPS at 14 cents. Beats the 6-cent estimate. Sales of 1.69 billion beat the 1.62 billion estimate. Shopify gross merchandise volume was up 17% and expects Q4 gross merchandise percentage to be at 2 to 3% points higher than Q2, yet taking a hit.
This was a good quarter, but it reported on the absolute wrong day again. And it's funny, this thing was up $5 last night. And I was just chatting with one of the traders at Bright Trade. I was like, you see Shopify up 5? I'm like, we should just blindly short this and not even worry about the quarter. The quarter was fine, but it's just not the day for it. And I actually tried, and it was starting to go, like, I waited, I never want to, I like to shoot them in the back, not in the front. So it started to come down. And I'm like, it's 67, 66 and a half, 66, and then it chopped around there a little bit. And I was trying to get the short off just around 66, and I just missed it. And then she just collapsed, 65, 64, 63, and like a minute. I was like, are you kidding me? I'm like, and boom, and then it goes red 62, and I'm like, wow, that was not up there for more than like 2 or 3 minutes. And then they turned around and just hammered it. Again, wrong day to report.
Were you on the offer, Dennis? Were you on the offer? Were you trying to short it on the offer?
Yeah, well, it was chopping. Yeah, I was.
Okay.
You just got to hit the bid. But do you want to hit the bid 50 cents down, Joel? Because it's different. When you're trading earnings, Joel thinks it's like open. You got a 3-cent market. You got a 50-cent freaking market. So you're trying to be high offer, be low offer. You're moving it down. You're trying to be low offer. And then other people and bots are getting in front of you, and it's trading ahead of you. It's not that easy. Like when you're trading these things on earnings, you don't have like a nice little 5-cent tidy market. 5-cent bid, boom, hit it. Offer 60, 66, bid 65.95, you've got them. But it's like 65.25 bid, 66 offer. So you're like, okay, I'll go 65.95. You're trying to get, some sucker basically on the other side. Yeah. So just not thick enough, and it just tanked. And I was like mad at myself on this one. Blind, like I tweeted this last night. The blind squirrels that are just blindly selling the pops are making money.
58. I know it's another 235 away, but if you're looking for your next area of support, 2 daily lows, 57.93 and 94 back in early June. So I use that as a target. And underneath that, the low of the move, the gap day, I believe that was last earnings, 53.88.
Let's go. Let's keep it going here. Let's go to Robinhood markets here as Q2 EPS here at 3 cents beats the loss estimate of 2 cents. Sales of 486 million beat the 475.02 estimate. Cryptocurrency related revenue is down 18% quarter over quarter. Transaction revenue was down also 7% quarter over quarter, but net interest revenues, of course, up. Of course, the Fed rate trying to help that out. But monthly active users were at 10.8 million for the second quarter, down about 1 million accounts, but still seeing more revenue per users. So that just shows me a little bit more that we're in a bull market versus a bear market. But active users still down. That's not what I want to see in Robinhood.
And the stocks went from 9 to 13 in 3 weeks. So it's, just now it was, obviously consolidating a little bit before that. It's resolving itself to the downside. There's not a lot of support until I get to 11. The rip last night immediately sold. Whoever's buying at 1280 is not looking at their charts. There was all kinds of resistance from 1280 to 1290. And again, reporting on the wrong day. The bots had it up there for about a split second, and then it just tanked. So the bots that are just blindly buying on an earnings beat are getting their asses kicked.
You mentioned the move. The whole retracement, though, is really closer from the $8 level, 8 to 13.5. So that's 10.5, 11. I don't know if you're going to see that today, but I'd be more interested in a potential gap fill, just a little one. I like 11.30 on the downside, and you know what? It already hit 11.32. This one might be a little bit of all the pre-market charts that I've looked at so far. This is like the only only one that okay, we may not see the pre-market low. Everything else was pressing on the low. The bottom of yesterday's range is achievable, I believe, in this one. If you sneak up to 12.18, which you could very easily do. That was the bottom of yesterday's range.
Unity Software Q2 EPS came in at a negative 51, missing the 6 cent estimate. Not sure exactly what happened there. Something had to have happened. I need to take a little bit deeper look. Yeah, some adjustment that it kind of weighed in there. But sales at 533.48 million beat the 514.18 million estimate. Now, when you look at their guidance, this actually looks great. Q3 revenues 540 to 550 versus a 500.2 million estimate. Also, full year 23 revenue outlooks also above estimates, even on the lower end. So this looks great. In the report, they stated that we're encouraged by the progress on profitability, with the second quarter adjusted EBITDA margins at 18.5%, which compares to 6.5% in the first quarter of this year and a negative 12.7% in the second quarter of the prior year. So moving forward, closer towards profitability.
Yeah, and this quarter was pretty good. The problem is you've got major resistance at 45, and it's not surprising. This thing, every time it's sniffed into the 44s, it's struggling to get through there. So unless this market just turns around on a dime, this is going to struggle to get through the 44 to 45 area. So I think you want to be a seller on the pop, unfortunately, even though I like the company.
I'm going to go a little bit lower than the 45, and I'm going to use the 44 as the parameter. You did sneak just above it after hours, but since the pre-market session, someone's like, they went out at 44. That's also yesterday's high at 44.03. So that's a big, I mean, that's identifiable resistance to me. Coming back on the downside, I mean, support at the close. And I'll give you minor support at the close because we know what AMD did going through the close. So no 2 days are the same. And Dennis, did you see where the AMD stopped yesterday?
Right,
Did
the
you?
major support that it's had
Yeah.
forever. I mean, support resistance just works, and all kinds of support that 107 area, and that's right where it stops. So when you're
Yeah,
getting
but that was
short of
pretty
stock,
wicked. That was a wicked move, though.
we felt it in the pre-market. Everything I wanted to sell, the rest of it, but I'm like, you know what? Separate it. You got to hold something. You like AMD long term. I wish I would have sold it all. Wicked key reversal. It looks like crap on the charts now. It's at
Yeah.
support. It bounced where it should, but this looks like it could have a date with 100. Talking against my book, nobody does that.
Take it, folks, please mark that 107.50 area. I mean, that is just, if you're hanging on to your AMD, I mean, that's just a great level. Remember, what was there? There was some bad news on it too. I remember it was trying to rally out of here, and it traded down like to 105.5, 106 or something in the pre-market, and then it bottomed like 107.5 again, and that was part of the magical run there. So just real quick, should we take a look at Nvidia? Where are you guys buying the dip in Nvidia? Doesn't that look like it hasn't even sold off yet?
Yeah,
I mean,
it's still up at the highs.
Hasn't.
This is still, you're actually, if you're selling it today, you're still getting it right near the high. I think Nvidia's got a date under 400. So I would be a seller of all rallies in Nvidia. I think now it's going to break trend. I think the AI story will carry it later, maybe this year or maybe even into 2024. But I think we've got a cool off period coming. I think Nvidia is going to be a victim of that.
S&P's rallying, Dennis. Watch out on the offer
We
side.
want a rally. So I'm really hoping we get a rally so I can sell more stocks.
Like, I'm okay with the rally today,
We
too.
want
right?
a rally
'Cause-
to sell more stocks.
Exactly.
We're not
I
looking
think-
for, so again, I moved the camp from buy the dip to sell the rip. I'm hoping for a rally to sell more stocks.
Seasonality, you might not, I mean, seasonality, usually based on seasonality from stock odds, the first Friday of August is usually up. Now we have a jobs number and the way it falls. So just keep that in the back of your mind from a seasonality standpoint.
All right, let's keep going. I can look at stocks all day, but let's do some more earnings reports. Let's go to Moderna here as they reported earnings. Q2 EPS at a loss of 362 beats the loss of 384. I don't know these outlooks, man, but sales of 344 million beats the 290.74 million estimate. They expect 23 COVID-19 vaccine sales of 6 billion and 8 billion. And I love how they include this little added bonus, dependent on U.S. vaccination rates. Then when you look at the U.S. vaccination rates, Moderna COVID vaccines outlooks have dropped 94% in Q2 for the COVID outlook. I don't know if they're going to be able to hit that 6 billion or 8 billion.
COVID shot. There isn't a lot of people getting COVID shots anymore.
There has been a spike, though. I will say there has been a recent spike in COVID kind of infections. You're seeing it around. You're seeing people get sick. So
when who officially declared the pandemic over, it was over for all these stocks. BNTX. I think BNTX is just sitting here. It looks like it's ready to fall off a cliff. I think it's going to go well below $100. I cannot be more bearish all these stocks. Sorry.
So you getting out of your Pfizer?
Pfizer's already kind of been hit. I mean, Pfizer's already Like, well, how much revenue is the COVID shots now in Pfizer? I don't know. I guess I got to go look. Maybe it's still a little bit, but I highly doubt Pfizer's getting at a point to where it was before the pandemic even started here, Mitch. So Pfizer has a lot of other drugs. They've got a lot of others that diversified. These Modernas and BioNTech, and forget about Novavax. That was just a disaster forever. I think I can ride Novavax a short squeeze, and I think we're getting past those right now. So Pfizer, a little different story, but epic disaster by me too. I've already owned that one.
Me too.
I obviously underestimate how much COVID shots were contributing to revenue.
Yep, I got it. I think I got it in the lower 40s. So just don't look at it. Don't look at the ones that go down.
You don't look at the ones going down. Let's look at ALB because it's going up for me. Albemarle.
Don't frown, just don't look.
Look at ALB and give me the earnings for this one here, Money Mitch.
The key to long-term investing.
Let's go. This is
actually it is. It honestly is.
All right, let's go to ALB's earnings here. Let's take a look. Of course, lithium player here. EPS at $7.33 beats the $4.44 estimate. Sales of $2.37 billion missed the $2.43 billion estimate. They did see 23 net sales increasing 40 to 55% year over year. Sees fiscal 23 adjusted EPS at 25 to 29.50. versus 23.31 estimate. That looks pretty good there. Definitely getting a nice lift here. And this could maybe kickstart the whole lithium industry, right? Why not?
If this reported this quarter last week, before we had this turn in sentiment, this would be up $30 on this.
Yeah, maybe like $250
it's up 11
already.
bucks only, and I'm long the stock. It's up 11 bucks only because it's reported on the wrong day. But this quarter is nothing short of fantastic. They're talking about making $29 on the high end. The thing's trading with a PE of 7. Again, cyclical again, but they came out with $7.33 of earnings. They were supposed to make $4.44.
Oh, wow.
This is better than the Nvidia beat that we remember it went up that on. But it doesn't even matter because it reported on the wrong day, and they're going to see this as cyclical, and this is going to be as good as it gets because that's just what they do. They're trying to find the negative narrative here. I own this stock. I think it's a fantastic company for long term. I know it's short term. I don't know if you're chasing it or not. But long term, I'm in from around this price. I'm averaging around, I think, 220. So I'm actually down in it now. But I think if you're owning this for the next 10 years, I just see EV not going away. Lithium's going to be major. It's your biggest lithium producer, and they just print money. So I think this is a fantastic stock to own on dips long term.
Just for the short term, if you're trading this, you've had an extended decline, so you have some people maybe looking to get out. I like when a pre-market level coincides with a daily high, pre-market high 1550, and your 3-day high 1582. So if you want more follow through on ALB, that's what you need to get through. Get in the 216 handle, but resistance is resistance until it's taken out.
All right, I did want to let you guys know I will be talking about certain stocks like this in the long-term outlook. I got a Twitter space later today that we're going to be talking about stocks for.
What do you think ALB and lithium long-term? What do you think long-term?
Yeah, that's exactly what I'm talking about on 12 p.m. Come out here, guys. I'll give you guys the Twitter space, of course. I'll give you guys the link for that as we wrap up the show today. I'm going to be doing a Twitter space at 12 p.m. on Twitter, talking specifically about long-term stocks, right? So ALB will be a part of my mentions. I'm going to be talking, of course, lithium names. I'm going to be talking, of course, LiDAR. I'll be getting into different areas, sports betting. We'll talk a little bit about some of the stocks that I look for on a long-term basis.
We've had a hell of a pullback in LTHM here too, and I own this one. Joel, you still own this?
Yeah. I still got it.
I think this could kickstart.
Once Joel buys a stock, it's almost impossible to get it out of his portfolio. He holds longer than Warren Buffett.
Oh, so, it's from the 80s, You got
I think you've pulled back enough on this lithium. I think eventually there's going to be, some type of relief pop. But again, this is not the market to be buying dips. But throw this on your shopping list too, this LTHM, because in the low 20s, I think this is a buy. I'm long it.
Yeah.
Go ahead.
What is Twitter? What I mean, X. Dennis, have you been as active on Twitter lately?
I get these pop-ups now, and it's X, and I was like, "What is that?" I just try to X it off. I try to press the X, but then it opens it up.
I don't know if it's even spaces anymore. Is it just like Hostess?
X.
What is he doing?
I have no idea,
What
man.
is he
But
do? He is just destroying Twitter. He is absolutely destroying
dude, that's what happens when you have money and you just don't know what to do with it. But hey,
Yeah.
let's just keep going. Let's get to another stock here. This is a real disappointment. Let's go to Warner Brothers Discovery. They can't get things right here. The Q2 EPS here at loss of 51 cents misses the loss of 39 cent estimate. Sales of 10.36 billion misses the 10.47 billion estimate. They say here that the WGA strike is affecting their cash provided by operating activities by 100 million. This does not look good. I don't want anything to do with this company. I just gotten to the point. It's on the ban list. I'm not even looking at it anymore. WBD, goodbye.
Every rally to be sold, in my opinion. Every rally. It rallied again this morning. It was up $1, and it can't even hold it for a morning. It can't even hold the rally for an hour. There's so many people who are just destroyed on this stock. It hit $78 during the ridiculous 2021 peak. It's now $12, and you think, oh, eventually, yeah, if I hold lines enough, it's going back to 70. Well, it's not. So, what do you have?
27.50.
I've got 70. On my charting system. Maybe I'm wrong.
78.08 on
I have $78
March
too.
22nd, 21.
Maybe there was a switch of like company name or something, Joel. I remember them doing some funky stuff, but I got 78
No, what
bucks
happened
high on
was,
this.
remember, this was that capital company that got caught, and then something happened where it spiked on it. And you guys remember that
No,
story?
you're thinking of
Our charts are Jack is confirming it's plan B. I think it was because they had something to do with some spinoff or something, but I'm still showing 78 bucks.
Okay.
So I'm not 100% if that's right, but it's showing me a high of $78, and it's showing me pretty consistently like trading. So I think it's right.
This is an accordion chart, so I'm just gonna pass on this one.
Accordion to the downside. Next.
All right, let's keep going. We'll get out of this one. Let's go to the next one here. An interesting report. Let's go to MGM. I think this is interesting to kind of keep an eye out for because the casinos actually have been doing pretty well as of late. International MGM Resorts International Q2 adjusted EPS here at 59 cents beats the 54-cent estimate. Sales of 3.94 billion beat the 3.82 billion estimate. Las Vegas at 2.1 billion, flat. Regional operations, 926 million, minus 3% year over year. Now, MGM China up 741 million. It's up 418% year over year. So I might be looking at Macau casinos, maybe have some really good numbers here. BetMGM posting operating losses of 22.5 million for the company for the quarter compared to a loss of 71.2 million a year ago. And BetMGM reported that it achieved its first EBITDA quarter, positive EBITDA quarter, and remains on track to achieve its next milestone of second half profitability. And this came from MGM CEO Bill Hornbuckle.
Wow, down 6%. This is actually an okay quarter, but this market is just unforgiving here right now. I mean, if you don't blow it away, you're getting hit. This actually is a pretty good quarter here.
Pretty good quarter, man.
Good quarter, and
I've talked about
6%.
how BetMGM is the best product in betting.
I like MGM on a pullback here. Again, I'm not going in on day one because we're just not in this buy the dip market, in my opinion. Maybe I'm going to be wrong. Maybe we're just going to buy and we're going to buy and we're going to be back at the highs and be mad we didn't do it. But I feel like there's more in store. $44 though. This hits 44. I think you got to be thinking about putting this thing in your portfolio. So 46 it is right now. If it just gets silly town, 44 is where it broke out from in July. I'd say old support, old resistance becomes new support on this one.
I'd say a big level ahead of that is 45, 47, because on that day that you made the low, blasted through 44, you closed right near the high of the session at 45.5, and then that was almost the exact low the following day. So ahead of Dennis's 44 today, look for 45.5.
I'll tell you what tells us a lot today. Let's take a look at a stock that actually jumped up on earnings, but now getting crushed in the pre-market here. Let's go to Doordash here. Q2 EPS at a loss of 44 cents, misses the loss of 42-cent estimate. Sales of 2.13 billion, beat the 2.05 billion estimate. They expect Q3 EBITDA 220 million to 270 million, and it was getting the lift. You see it on the pop, but now look where it's at.
It's the algos, news algos didn't get the memo that we turned here and we're selling rips here now. They obviously don't read my Twitter because this popped up right to the right to the high from 3 days ago.
Yep,
And everybody's
exactly.
like, happy sellers, happy sellers. Thank you. Give me my money back. Oh, I missed that. Well, I'll take 91. Oh, I missed that. Well, I'll take 90. Oh, I missed that. Well, I'll take 89. Oh, I missed that. I'll take 88 now. Oh, I'm trying to get out at 88. I'm 22,000 shares on the offer. I can see there, Joel. Some institutions like, yeah, 20. That's a huge offer for DoorDash. It's traded 70,000 the entire morning. That's probably not even like some of it might even be FINRA volume here. And you got 88, you got 22,000 just sitting at 88 trying to get out. Happy sellers all over the place in this thing. Not the kind of stock you want to own if you're going into a market correction.
And Dennis is at 87.99.
That's what I would do.
Looking at this one, what are the yesterday's range? Tell me, not much. Let's hold the top of yesterday's range as 86.81. There you're still, you're still staying in the green. Coming back, I think if they can plow through that seller at 88, I think he may wait until 90. That's your 2-day high, 90 right on the kisser. But boy, oh boy, you're talking about the overshoot. Man, 92.61 was your 3-day high. They took a little bit over 93. You may regret these things when it goes through your price a little bit. But if you weren't out there at 92.61 on the way up, you had no shot at it on the way back down.
All right, let's go to a stock that's just been getting wrecked the last 3 days. Let's go to Etsy right quick. Q2 EPS at 45 cents beats the 41 cent estimate. Sales of 628.8 million beat the 621.87 million estimate, but still just getting whacked.
Decent quarter, wrong day, wrong type of stock to own in a correction. We're down $9. Valuation is an issue here. You don't have value investors coming in here. It's just not the kind of stock you want to own if you're getting into. And they're making money now, but it's still 45 cents, 90 cents, $1.50. Things trading 60 or 70 times earnings here. $80 support, 80. That's a long ways down.
Oh, I'd go. You're down 9 sticks today. I mean, Dennis talking longer term, shorter term. I think maybe if you could get, there was a gap fill on July 10th and 11th. So I'd look at 85, 86 or just under 86. That's a buck away as a potential support point on the gap fill. And these gap fills could be important. I mean, if you were focusing on the gap fill in PayPal, right after it broke down, I don't know if it was earnings or whatnot back in early May. Look how it moseyed its way all the way back up to that area, filled the gap. So that's what I'm looking at in Etsy, ETSY.
All right, let's go to one that I took a shot in a stock that's related to it. So we'll talk a little bit about that. Let's go to Cigna. We've been talking about these healthcare plans, and of course, we got CVS yesterday. We got also Humana, Cigna Group here. Q2 adjusted EPS at $6.13 beats the $5.98 estimate. Sales of $48.62 billion beat the $47.13 billion estimate. They raised full year sales guidance. It's looking good here, at least on the guidance. Looking forward, of course, probably just the wrong day to report, as Cigna's just not getting the lift as expected. And I will tell you guys, at least I did take a shot on Humana yesterday.
Did you?
Got 481s and just missed my sale, but just like about a buck on the first sale. I was trying to get 490s. It went to 488.79 yesterday. But we'll see if it can be able to get 490s today.
I mean, you've got to know, and again, if you're a trader, you need to group stocks. And these are defensive. These are stocks that actually can go up on down days. CVS, for instance, was down yesterday morning on its report, but it's reporting on a day that they're whacking everything, and it's defensive stock. So what did they do? They turned around and just started buying the rotation. They just bought it from the opening print. They couldn't stop buying it. So Humana was the same story. CI is the same type of story here too. The market actually starts to roll over hard. CI could actually catch a bit. If the market starts to rally, CI could actually sell off. These stocks move opposite to the market a lot of times. Keep that in mind.
It's hard. I know, Dennis. You've been preaching that to me for years, and it's
hard to buy stocks when the market's going down.
Yeah,
I mean, there's quietly here today, like you've got Clorox. Let's talk Clorox earnings because reporting on the absolutely right day. Defensive stock reports. Give us the numbers here, Money Mitch.
Got you in 2 seconds here. I'll get you guys those numbers here at They reported their earnings comes in at 167, beats the 118 estimate on EPS. Sales of 2.02 billion beat the 1.88 billion estimate. Now, it looks like a pretty good outlook here also for fiscal year 24 EPS at $5.60 to $5.90 versus a $5.63 estimate. So good day to
Clorox.
report.
Fantastic day for Clorox to report. Not for most stocks, but Clorox is defensive and they blow it away and we're moving into defense. That's what they were doing yesterday. So it's not surprising that Clorox pops this much. I'm not surprised. On this quarter, it was really good. This should pop no matter what. But now you're reporting and you're a defensive stock. They're like, oh, I'm selling, I'm getting killed and, all these other tech stocks here. What am I going to buy? Let's buy defense. Let's buy Clorox. That's what they think. You
Dennis,
wonder,
is there enough volume to get it to open up here?
Yeah, it doesn't trade much, Joel. So
Yeah.
I think so. I actually think it will open this high.
I'm going to give you guys
quietly
one number.
You
Go
know what's
ahead.
funny is Procter & Gamble getting no lift off of this. Kimberly Clark getting no lift off of this.
Yeah.
Watch those this morning for little sympathy trades here because if Clorox stays up 7%, I find it's going to be hard to believe that Procter & Gamble's going to, open red or Kimberly Clark's going to open red.
164. I mean, there's nothing there on the dailies to validate the 164. I think a reasonable target. Well, 163.42 was an intermediate high. So we'll take a look at that. I'm going to wrap things up. We're chopping around pretty good here. That pre-market low nestles in with the July 13th low. So a little confluence there. On the upside, we really have been choppy. But since we made the low of the day, we have really struggled at yesterday's low, which is 27.75. So we get above that, a sustained bid above 45.28. We'll take a look at that pre-market high at 45.47. If in fact you breach that pre-market low, I mean, I don't know how excited I would be getting on the downside there. So great show. Way to go, Mitch. Way to keep us focused. Thanks to Marc Chaikin for coming on, and be back with you all later on. Have a great day.
Have a good one, Joel. And just saw this hit the tape just a second ago. It looks like Expedia's earnings are just destroying it right now. You guys can see this
destroying the stock.
Yeah, and this just tells me watch out for leisure, watch out for the cruise lines, watch out for the airlines, and even watch out for the turnaround in lodging that I've been pointing towards the upside. You got to know when to flip. Right now would be that time for me on Marriott and stocks like that. They've had their run. And now you got to be careful for these pullbacks. Like Marriott's had a nice run. Airbnb's had a nice little run. We talked about how the 150 seemed like it was acting as resistance there. And now you can clearly see that pullback. I could see Airbnb coming back to 130, 125. But we'll see what happens there. Be careful also cruise lines today. I could see those dropping a significant amount. Even Royal Caribbean that had really good earnings. I can see it coming back towards around 100. That seems to make sense for me. Airlines, I'd be careful as we're starting to see Expedia really get hit. And Expedia was doing well, right? We were thinking that travel was getting a nice little big boost there. And you can see it now. Expedia with a big hit.
Huge. It's getting hammered here. I'm just like leafing through the report here right now because it just broke. And the initial numbers don't look that bad. But again, it's just the same story here. Expectations simply too high, and you got to blow it away when your expectations are higher, and it doesn't appear that they blew it away.
I mean, the adjusted EPS looked good there. It's a 289 beats the 232 estimate. Sales just barely missed 3.36 billion.
Finding reasons to sell stocks.
3.37. Exactly. That's what we want to point to also, is that this earnings really isn't horrible. It isn't a disaster report, but yet the price action is disaster, right? And I think that that's what we're pointing towards. And now I'd be really careful on these leisure type of stocks, travel type of stocks, as you're probably going to see them start to turn here. And now I'm kind of glad I got out of Hyatt, took my money and ran on that trade as it starts to pull back really quickly. We'll see what happens on these.
What a mess.
Yeah, this is also a time where normally, like yesterday, I talked about this on Start Swing Trade and live trading. This is when I start seeing the market rotate against me. For a little while there, like last week, I had up to 9 positions open, long, right? Like looking for like kind of big moves. Now, what am I down to? I'm down to 3 positions, right? Because we're starting to get this correction and we need
what
to
do you
take
still
a
own?
reassessment. So right now I still have BJ
BJ
Wholesales.
Wholesale.
And you
Sure.
can see that just starting to climb. I've been trying to get it into that gap
It's
zone.
kind of a defensive
We'll
stock.
see if
I
it
don't
gets
mind
there.
that.
Yeah, department store, right? I have XOM, which I'm really keeping close towards this 104.50. 104.50s go, I'm out.
Yeah.
So if that 104.50 goes, I'm out. Like it's clear as day right there. And then Humana is the last one that I have. And I sold PXD. I got out of a lot of the growth names, like even LAZR.
Yeah, nice sell.
Because it's not going to make sense in this current environment right now. In the current environment last week, hell yeah, I wanted LAZR. In this current environment, I got to get out of some of these growth names. Some of these names like QS. Look how quickly these can turn right back around, right? So be careful with stocks like, let's say,
oh my
growth
gosh,
names
QS,
today.
I didn't even look at that one today. Just like that poof, the entire rally's gone.
Yeah, and that's how quickly these trend trades turn, right? We talk about this all the time, Dennis, that trend trading is really great, but it also really quickly can destroy you. So you've got
to be able to know when to take the profits and identify when those turning points can happen. I mean, and again, it depends on time horizon too, but there was a lot of tea leaves. Like sometimes it's really hard. And then last week, there was just a lot of tea leaves telling us. And that's why we've turned, and talking about this correction for the last 3 or 4 shows, because you could kind of feel it. The key reversal day, we were very bearish that show. And bearish is not bear market, folks. Bearish just means you think the stocks are going down short term. Bear market is they're down 20%. So it's a big difference. But bearish, we turned bearish really on last Thursday with the key reversals. We talked about that. And then we had Friday, and there was like, I think it's a suckers rally. I tweeted out, I think it's a suckers rally. I sold a bunch of stocks into it. It was 2 days, and I was like questioning myself. I was like, maybe it's not a suckers rally. But then the Fitch thing was catalyst to really start the profit taking. Now you get like 40 analysts downgrading stocks today, almost all to neutral because they all had buys on these things. Like we can just go through the list. Like you got like just starting at the bottom here. Like, well, a lot of names you don't know, but Qualcomm, Etsy, Roku, all to neutral. SPR, it's to neutral. Love is to sell. Somebody downgrade love to sell. SPG, COLM, DXC, Doximity. I mean, there's just a bunch of names on here.
Who goes and puts Roku? Who downgrades Roku after that move? That's how you know they're like, man.
They're ringing the register.
They're ringing the register, right?
They're ringing the register. The analysts are ringing the register, and the investors are ringing the register right now too. That's why we're seeing the weakness. It's not that we have imminent, problems coming on the horizon. There could be, but it's more just Fitch was an excuse to take profits, and that's what the market is doing.
Yep. And now we'll just have to see how far this correction actually goes. That's what we're calling for. That's what we talked about yesterday. Now it seems like we're actually getting some action to that correction. Of course, markets don't just go in one way. We could see a little bit of a bounce today. We'll find out. And of course, big reports tonight can change everything. Apple, Amazon, the big boys. We'll see what happens tonight. Of course, you guys can catch those reports right here on Benzinga, of course. Keep up with everything Triple D does. Dennis Dick, it's always good to have you, my friend.
I'm hoping for a rally today. I'm hoping we can get a rally to sell more stocks. I'm not buying the dip here today. I'm actually hoping for a rally to sell more stocks. I think you still have this buy the dip mentality out there. I think it's wrong. I think you still have this buy the dip mentality out there, which is going to allow us to maybe sell more stocks. So hoping buy the dippers come in, emerge maybe after 10 o'clock, you get the 2-day move here. Wouldn't surprise me if we could turn around and rally a little bit. I mean, wouldn't surprise me if we continue to sell off too, but I'm hoping for a rally here to sell more stocks.
All right, we'll take a look at that. Like always, keep up with Dennis Dick. It's always good to have you, my friend. Go do what you do best.
Money match.
All right, he's going to get to his trading action. Like always, we'll see what happens. You guys can keep up with everything right here on Benzinga. And later today, we do have a great webinar for you guys. We're going to be getting into pharma companies and a tough macro backdrop. Find out later today at 11 a.m. Our virtual events goes live there. If you want to find out, don't miss it later today. I'll give you guys the link for that right now if you guys want to catch that. At 11 a.m., that's when that will start. Now to bring you guys over to live trading, that's coming up next. I don't have Lloyd Ryan, but of course I have Nick Brown. So you guys know it. I'm going to be, talking all about different trading action. And like I've mentioned a little bit earlier today, If you guys want to catch my trades, my Twitter space later today at 12 p.m. Eastern, you guys can definitely check it out. It's going to be on Commonwealth. Is link here. I'll give you guys here the post for the Twitter. If you guys want to go ahead and retweet that for me, I truly appreciate that. And I'm going to be talking long-term there for this bull market. So looking at, like, let's say a 1 to 2 year outlook, that's what I'm going to be thinking about. So if you want to think about long-term stocks, go catch that Twitter space at 12 p.m. Eastern. Now to bring you guys over to live trading action and see what we can find today. Of course, I have 3 swing trades positions on, can take some moo trades. Going to be looking at potentially even doing some shorting outlook. Definitely, it should be a good time. I know the SQQQs are probably doing really good. I hope Ryan still has them. We'll find out, of course. Smash the like button, guys. Let's keep going and bring you guys over to the live trading that's starting up next.